Hello everyone, welcome to the market opening bell for Wednesday, December 3rd, 2025, your 10-minute guide to the stock market. Hong Kong stocks started the day firmly in the green but gradually gave back most of the early gains as buying momentum faded. Turnover remained lackluster, coming in below the 180 billion Hong Kong dollar mark. The Hang Seng Index opened 155 points higher and at one stage climbed as much as 230 points to touch 26,264. In the afternoon, however, the advance ran out of steam. The index briefly slipped into the red, dipping to 25,989. Before buyers stepped in again and pushed it back above the key 26,000 level. By the close, the Hang Seng Index settled at 26,095, up 61 points or 0.2% on the day. The H-share index edged up 9 points or 0.1% to 9,182, while the Hang Seng Tech Index was the laggard, falling 20 points or 0.4% to 5,624. Total market turnover was 178.247 billion Hong Kong dollars, down 11.3% from the previous session. Southbound Stock Connect saw net inflows of $4.101 billion, higher than the $2.748 billion recorded the day before. Mainland investors continue to favor consumer internet names. Meituan attracted the largest net buying of $592 million, followed by Xiaomi, $380 million, Alibaba, $357 million, Kuaishou, $250 million, and Giant Biogene, $131 million. On the selling side, Tencent saw net outflows of $381 million and CNOOC, $272 million. Notably, southbound funds have now bought Alibaba for 14 straight sessions, totaling $28.222 billion, while Meituan and Xiaomi have also enjoyed multi-day buying streaks. From a technical perspective, the Hang Seng Index managed to poke above the 50-day moving average at 26,228 during the session, but failed to hold above it by the close. A decisive break and close above that level is still needed for clearer bullish signal. Immediate downside support sits at the 10-day moving average around 25,835 and the 100-day moving average near 25,772. Over on the mainland, the Asia market was weaker throughout the day. The Shanghai Composite finished at 3,897 after falling 16 points or 0.4%. The Shenzhen component dropped 90 points or 0.7% to 13,056 and the Chinex index lost 21 points or 0.7% to close at 3,071. Combined turnover in Shanghai and Shenzhen was 1.5934 trillion yuan. The renminbi central parity rate against the dollar was set 35 pips weaker at 7.0794. Among individual Hong Kong stocks, Alibaba rose 1.4% to close at $157 after briefly touching $160.1. The company granted 6.1158 million restricted shares under its 2024 equity plan and rolled out an upgraded Quant image model with significant improvements in consistency and multi-model capabilities. It also officially launched its Quark AI glasses with supplier Conant Optical jumping more than 10% yesterday to a new post-listing high. Kuaishou gained 0.9% after unveiling its self-developed large model Kling O1, described as the industry's first unified multi-model creation tool that handles text, video, images, and subjects in a single engine. NetEase also rose 0.9% on news that the mobile version of its highly anticipated game Where Winds Meet will launch globally on December 12th. Meituan, on the other hand, fell 3.1% to $96.5, while Oriental Selection dropped 3.4% after reports that it has added food delivery services to its business scope, raising the prospect of even fiercer competition in the already cutthroat meal delivery sector. Macau gaming stocks performed well after November gross gaming revenue came in at around 21.1 billion petakas, up 14% year-on-year and ahead of market expectations. Daily average GGR reached 703 million petakas with a strong finish to the month, pushing the final week's daily run rate to 784 million petakas. Two new listings will make their debut today. Jinyan Kaolin New Material closed its grey market session on Philip Mart at 10.05 Hong Kong dollars, 37.7% above its IPO price, delivering a paper profit of $1,375 per lot. Le Services was even stronger, ending the grey market on Philip Mart at $65, a 62.5% premium for a paper gain of $2,500 per lot. Overnight, U.S. markets closed higher amid rising Fed rate cut expectations and Bitcoin reclaiming 91,000 US dollars. The Dow rose 185 points or 0.4% to 47,474. The Nasdaq added 137 points or 0.6% to 23,413, and the S&P 500 gained 16 points or 0.25% to 6,829. Amazon announced that its next-generation Trainium 4 AI chips will incorporate NVIDIA's NVLink fusion technology, while Tesla reported stronger November sales in China, up 9.9% year-on-year and 41% month-on-month. That wraps up today's update. For those trading futures, don't forget the special offer running until February 28, 2026. Hang Seng Tech Index futures are commission-free, both day and overnight trades, with rebates credited early the following months. Our stock pick today is Luk Fook Holdings, stock code 590. Luk Fook Holdings announced its interim results for the 6 months ended 30th September 2025, benefiting from effective product differentiation and sales strategies. Sales of fixed-price jewelry products surged 68%, driving the group's overall revenue up 25.6% year-on-year to 6.8 billion Hong Kong dollars. Overall, same-store sales growth reached 7.7%, a strong turnaround from minus 34.3% in the previous year, thanks to rising gold prices and a higher proportion of sales coming from higher margin fixed price jewelry products. The group's overall gross margin increased by 2 percentage points to a record high of 34.7%. Operating leverage further lifted the operating profit margin by 1.6 percentage points to 11.4%, resulting in operating profit rising 45.4% to 780 million Hong Kong dollars. Profit attributable to shareholders grew 44.1% to 600 million dollars. The group proposes to pay an interim dividend of 0.55 Hong Kong dollars per share, representing a payout ratio of 52%. Under its multi-brand strategy, the group operates 2 main brands and 4 sub-brands product lines. As of 30th September 2025, it had a total of 3,113 shops worldwide. This total includes 2,632 Luk Fook shops located across Hong Kong, Macau, mainland China, the United States, Canada, Australia, Malaysia, Cambodia, the Philippines, Laos, Thailand, and Vietnam. In addition, the group operates 238 3DG jewelry shops in Hong Kong and mainland China, 40 Luk Fook jewelry shops in Macau, mainland China, Malaysia, and the United States, 22 gold style shops in mainland China, 163 heirloom fortune shops in mainland China, 17 Luk Fook jewelry shops in mainland China, and 1 such store in Thailand. The group's efforts to broaden the range of products in its wholesale business, combined with successful product differentiation, drove strong sales of new products. As a result, wholesale revenue soared 190.6% to 1.117 billion Hong Kong dollars, raising its contribution to total revenue to 16.3% from 7.1% a year earlier. The wholesale segment swung from loss to profit, recording a segment profit of 107 million compared with a loss of 68.55 million in 2024 and contributing 12.5% of overall profit with a segment profit margin of 9.7%. The group has established a new 3-year corporate strategy starting from the 2025-6 financial year, centered on 3 key pillars: overseas market expansion, market-oriented products, and operational efficiency optimization to support future growth. The group is optimistic about the substantial development potential in overseas markets and will allocate more resources to actively expand there, planning a net addition of approximately 20 shops in overseas markets during the current financial year. Recommendation: buy at $25.3, target price $27.8, stop loss $24. I do not hold the above stock.